This bull market that's just getting started, like, we haven't even gotten to crypto fall. The halving is still yet to come, and that's what pushes us to the crazy parabolic blow off top. Once they show up and once the leverage starts, then we go right through fair value, so right past 75. Probably in history, we go to 2.3x. That's when we see the new all-time high. And
Mark Yusko starts off by highlighting that we are at the very beginning of a new bull market in cryptocurrencies. According to him, we haven't even reached the crypto fall yet, and the highly anticipated Bitcoin halving event is still ahead of us. Yusko predicts one more significant market dip before the halving, which he compares to a SpaceX explosion, where a wave of selling will occur around tax season. This dip might lead many to believe that the bull market is over, but Yusko reassures that it is just a part of the natural cycle. Yusko estimates Bitcoin's fair value to be around $52,000. As we approach the halving, he predicts that this fair value could double, potentially reaching $100,000. However, due to the introduction of Bitcoin ordinals and increased transaction fees, he revises this estimate to around $75,000 to $80,000. Despite this adjustment, Yusko anticipates that market speculation and leverage will push the price beyond this fair value, possibly reaching as high as $150,000 at the peak. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
this bull market that's just getting started, like, we haven't even gotten to crypto fall. The halving is still yet to come. And we have one more, let's call it SpaceX-like explosion that was planned right, after the Ides of March, before tax season this year. There's one more selling wave that's coming, and people are gonna go, oh my God, it's over. No. After that, and once the halving occurs, the 4-year cycle exists because of the halving, right? Halving embeds this natural proclivity for price to rise. Otherwise, the miners, who are integral to the success of the protocol, would find themselves in a pinch because their electricity costs and space costs are fixed. So, long story short, you have this cycle, and the cycle is exacerbated by humans, like the people watching the show. And, there are investors, people who buy assets when they're below their fair value. There are traders who don't give a shit about fair value. They just like to trade movement. There are speculators, which are the other side of hedgers. Hedgers are people who produce things and have to sell, like the miners or oil producers. But then there are the gamblers, and the gamblers are the people who don't understand or really care. They just want number go up, and then they buy on leverage. And that's what pushes us to the crazy parabolic blow off top. Fair value, we're nowhere close to the speculative top. This is fair value. Fair value, according to Tim's Metcalfe's law model, and I've been using the Metcalfe's law model since 2014. Metcalfe's law is the definitive way of calculating the value of a network, any network, whether it's Amazon, whether it's Apple, whether it's Bitcoin. And so the Metcalfe's law model said the fair value is about 52,000. Now I've been rounding it to 50 to make it easy. But when we were at 25, not that long ago, I was like, look, we're going to migrate slowly toward fair value of 50. And guess what? Here we are, almost up to the halving. But then what happens is the halving in previous cycles doubles the fair value. Like, well, what do you mean? Well, think about it. If the block rewards go down in half, the price has to adjust upward 100% to keep the revenues the same. Now, this time there's a subtle difference. So what I was saying before ordinals was that at the halving this year, that 100K number was my base case. But then ordinals happened and transactions went up and transaction fees went up. So it's possible, and I'm still working on this part. It's possible that fair value only goes to 75 or 80. Let's just say 75. So then the investors have been buying all this time up to fair value. Okay. Well, now we have new people. We have traders, we have speculators because the hedgers are selling. The gamblers haven't even showed up yet. Once they show up and once the leverage starts, then we go right through fair value. So right past 75. Probably in history, we go to 2.3x.
I was going to say we more than doubled it. Yeah.
Yeah, at the peak. We go to 2.3x at the peak. So we went to 69 on a fair value of 30 or 68. And so I don't think we'll go 2.3 times because I think there's less leverage. I think we go 2 times fair value. That's 150. That's when we see the new all-time high, and we will go past fair value. And we will then have people come in and say, okay, I need to be short this, and the cycle will start all over again. And that's fine. The Lunar New Year, every year, we just had it. Before Lunar New Year, there's a bunch of selling in China to fill up the red envelopes with cash. And it has happened every year since Bitcoin was started. And everybody's like, why is there selling pressure? Like, do you not understand 1.6 billion people filling up red envelopes with cash? They sell some Bitcoin. So that's one. And so we survived that. That was no problem. And that actually coincided with the GBTC liquidations and all that good stuff. But then you have Uncle Sam has to get paid. And it's amazing. It's amazing. Man, government, we don't care about Bitcoin. Bitcoin's a fraud. It just doesn't matter. It's the 5th question on the
tax return. It's insane.
It's the 5th question. So even though they don't care about it. And look, after a really good year, and last year was a really good year, up 155%. So there's going to be some taxes due. And people are going to sell to pay taxes. And that happens every 3 out of the 4 years, because you get 3 good years and a bad year, 3 good years and a bad year, 3 good years and a bad year. Every incidence, the next 12 months, we're up 100%. So that's interesting.
Yusko categorizes cryptocurrencies into several tiers. Bitcoin, the apex digital asset, serves as digital gold. Ethereum, the world computer, also holds substantial value. Below these, numerous utility tokens function as liquid venture capital in the pre-seed stage, where the majority will likely fail. However, within this high-risk environment, there are opportunities for extraordinary returns, provided investors diversify and manage their portfolios wisely. Yusko advises against focusing solely on single speculative assets. Instead, he suggests building a diversified portfolio, including core holdings in established cryptocurrencies like Bitcoin and Ethereum, while also exploring promising projects at lower tiers, such as Solana or Avalanche. He emphasizes the importance of taking profits and not getting overly attached to losing investments.
Bitcoin is the apex digital asset. It is digital gold, right? Ethereum, world computer, probably, pretty big deal. Then there's a few other cryptocurrencies that could maybe have a role, maybe not. We'll see. They're still vying for it. Then there's the thousands of utility tokens that are basically public or liquid venture capital. Pre-seed stage, not even seed stage, pre-seed stage venture capital. The loss ratio on pre-seed stage venture capital is in the high 90s, 97, 98, 99. So the vast majority of those projects are going to zero. Now, that doesn't mean they don't go up first, but the vast majority of them will go to zero. And if you're rifle shooting in those projects, find a different occupation, because if you scattershot, a shotgun blast, okay, build a portfolio, position size right, take some profits. That's fine. But yeah, if you're betting it all on one number, yes, somebody will win, and we'll have to hear incessantly about them winning, but the average person loses. Bitcoin is past the stage of the super wealth creation, right? It's not going to go from $1 to 50,000 again ever. Now, it is going to go from 50,000 to 150,000. It is going to go from 150,000 to 500,000. Those are perfectly good multiples, 3x each time, so 9x total. That's fine. But that's different than if you want to go down a level to Ethereum. Ethereum probably outperforms, maybe, and as long as there's not a backdoor. And down below that, if Solana fixes their problems, you make more money in that. If, Avalanche kind of catches on, and so you keep going down, and down at the bottom, there will be new things that get created that solve new problems. Some of them can make you 1,000x, 2,000x. Look, we made 2,000 times our money on Solana. It's the best multiple I've ever had in my life. And that wasn't my money. It was my client's money, and I'm happy and I get a little piece of that. But that, and it wasn't even me, right? That was Kyle and Tushar and whatever. But that happened only because you went from an idea, the germination of an idea, to wide acceptance. I won't say mass adoption, but wide acceptance. And there will be other projects like that, but you got to realize that for every one of those, you're going to have 4, 5, 6, literally, that go to zero. And I can name the ones that went to zero, like Harbor and others, but it's okay. So, and that's why investing has to be a portfolio approach, and you got to have your core holdings that preserve your wealth. But to your point, if you're still in the wealth creation phase, then focus on innovation, focus on ideas, focus on having enough exposure, and then have the ability to let those winners run, but don't ride the losers.
Investing in crypto should be viewed as a portfolio approach, balancing between wealth preservation and wealth creation. For those still in the wealth creation phase, Yusko recommends focusing on innovative ideas and ensuring sufficient exposure to potentially high-return investments. He underscores the necessity of letting winners run while avoiding riding losers into the ground. Mark Yusko provides a strategic framework for navigating the evolving cryptocurrency market. He highlights the importance of understanding the cyclical nature of the market, the impact of key events like the Bitcoin halving, and the need for a diversified investment approach. While the market will undoubtedly experience volatility, those who stay informed and strategically manage their portfolios stand to benefit significantly. Please like and subscribe my channel.